Morning, everyone. I wanted to leave a quick note for you regarding um, the spike in volatility and these crazy market conditions that we've currently got. I've had a couple clients reach out to ask about it, and it's a very good question to ask because for some of you who have not ever been through a quad 4 environment, this is what happens in a quad 4 environment. Typically, we have a market that's coming out of a quad 1 or 2 type scenario where the bulls are all bulled up and they think you buy the dip and all this kind of thing. And they are continuing to look for that market to extend higher. And yet we have the metric of volatility, which is a metric that really only top professionals really use in their management philosophies, but even a lot of top people get it wrong with volatility. And just to reiterate something I said yesterday in my market update, when you're at 30 vol on the VIX or higher, that is the F bucket, and F does not stand for fudge. That is the bucket of volatility where you need to be very careful about your equity positioning. Um, and it's one of the reasons why I sold down a position overnight for small loss in the healthcare ETF because of this volatility spike. The other thing about volatility that I'm going to be watching very closely over the next few days is, and in the market, and actually I'll share with you a chart. I'll just drag it onto the screen here. Give me a second. Um, so I'll just share with you. Here's the VIX first of all. So the VIX chart, which I think I showed this yesterday, has spiked big time. We're up in the 30s, well and truly. We had a big range on vol yesterday because, actually, let me get this bubble moved. Because we had markets such as the NASDAQ, let me just open this up, had a big trading range. So you see this bar right here of the NASDAQ. So the NASDAQ had a trading range of about 250 points, which is a pretty big trading range, but it closed on the low. So in the pre-markets overnight, so when I went to bed, the market was trading up a couple of percent in the pre-market. You can't rely on the pre-market for anything because, as you can see here, we've had this massive reversal intraday. That is not a good sign for the market. When you have a market that is big time up in the futures, cannot we cannot see the volatility drop, and we cannot see the market retain the gains that it had during the day. Not a good sign. So what's happening here is there's a lot of noise behind the scenes for sure, but the market is figuring out, or has figured out, that we are in quad 4, and we're going to see more of this kind of thing happening, where we might get we might get a big up day tomorrow. Who knows? But with volatility, and again, this is one of the key metrics, and volatility on the Vixen, which is the Nasdaq vol, also had a massive trading range and closed sort of in the top third of the range. But as you can see, this is just spiked up massively. The volatility on the Russell, which is the RVX, is the symbol for that. Same deal, massive range of vol, closed up in probably the top third or so of the bar. And again, not a good sign. Well and truly in the F bucket for those two. 36 vol on the Russell, 37 vol on the Vixen. Small caps and tech are not quad 4 positions. So we're at roughly a 20% correction in both the NASDAQ and the Russell. Could get worse from here. The S&P, similar sort of deal, and I don't know if I think I was showing that chart a minute ago, where we've just had this cascade lower. I mean, that is it. I mean, look at that. That is a cascade lower. We closed here at 44.59. We're now at 41.83. That's a massive drop in the S&P 500 over 5 trading days. Big time. So anyway, because I've had some clients ask, what's going on? Well, this is what's going on. Is it a reason to panic? Absolutely not. Is it a reason to make some changes in the portfolio? Sure. But again, what I said yesterday, and I'll quickly reiterate it, which is the Fed has caused this because the Fed keeps talking about raising interest rates, and rates have already gone up. So as I covered yesterday, watch the update from yesterday. Rates have already moved up a lot in the last in the last 4 months, let's say 5 months. Um, yeah, actually, it'll be 4 months, almost 5 months. This is causing problems in the economy, and if they raise rates in May by 50 basis points, it's game over. This market will almost certainly correct even more. And the moment that happens, the bond market, which has already started to discount future rate rises. So rates, and I covered this yesterday, watching the 30-year, the 10-year, and the 2-year pretty closely here. Those rates seemingly have peaked. Now, have they peaked? I'm not going to know that until more time and space passes. So I'm not going to make that call. But the action of those rates suggests that we may have passed that peak. So they peaked. Just going to quickly look at my notebook. We were at 284 yesterday on the 30, and I think we were at around 3% intraday in the last, let's say, in the last week, and it's just slowly started to come down from there. Now, the range of rates still has, for the 30-year, has a 3 handle on the percent. But again, we're closing. I haven't looked it up, but we're closing probably somewhere around the 2.8, 2.85 level at the moment. And the 2-year still has sort of a high watermark of 2.78, but that seems to be coming down a little bit as well. Anyway, I don't want to make this update too long, but let me just reiterate something. This is part of the process of Quad 4. So yes, there's going to be some volatility and some pain short term. There's no doubt about it. We almost can't escape it unless we were sitting in 100% cash, which I've chosen not to do that. I've chosen to have positions on. What we have to look at here is what happens over the next 1 to 3 months as the market really realizes that the economy is slowing, and then ask the question, which I do every single day, is the portfolio positioned reasonably well to take advantage of that? The answer to that is yes. And as I've mentioned a few times before to all of you, there are some positions in there that are going to be held for at least another 12 months, probably another 36 months. They are not positions that are going to perform well in Quad 4. Full stop. And that's what's dragging on performance at this point in time. One of those is Playboy. And if I can buy more of that, I'm telling you, I will be buying more of that as we go along. Because that stock is, first of all, its intrinsic value is well more than $10, just based on the businesses they have that they own. But stocks like that just don't perform well in a Quad 4 scenario. So anyway, that's one of the reasons why I'm not giving up on that at this stage. So take a deep breath. If you're nervous or whatever about any of this, please don't be. Been here before. Been through a Quad 4 situation before and traded that reasonably well. I'm going to trade this one reasonably well as well. But in the very, very short term, over a week or a couple of day period, anything can happen. So I'm confident that the portfolios are positioned the way they need to be. I just need any of you who are nervous or whatever, don't be. Take a deep breath. Sit back, relax, and know that the positions that are on at the moment are set up for the Quad 4 scenario. If you do have any questions, please feel free to text, email, book yourself in for a time to have a chat with me. And with that, I will say good day and enjoy the rest of your week. Bye.